What's going on, everybody? Everyone's been asking me the same question lately. Johnny, is now really the right time to buy real estate? Well, the numbers just came in and the truth might surprise you guys. According to the latest Realtor.com housing market report and NAR's recent analysis, inventory levels are at their highest point since the pandemic. Homes are sitting a lot longer on the market, and sellers are finally starting to negotiate again. That means the next few months, yes, the end of 2025 could be the best window we've seen in years for buyers and investors to make a smart move. Maybe. I'm Johnny Lynum, founder of REI Genius, retired lieutenant colonel, and full-time investor and wealth mentor. My mission is simple: to help professionals and veterans take control of their money, build financial security, and create freedom through real estate. In this video, we're going to break down what the September data really says about why this upcoming season could be your opportunity to buy when everyone else is waiting, and how smart investors are using this shift to build wealth strategically, not emotionally. Let's get into it. So we're gonna go through the data because the question keeps coming up: is it the right time? Is it the best time to buy real estate? And a lot of times we don't know. And for a lot of people, it could be, and for some, it could be. And so that's why it really depends. But when you really get down to it, NAR and they're in the business of selling houses. So I'm gonna give you both sides of it. But from this perspective, one, listings are up. We're gonna look at the data. Inventory levels typically peak in every fall. So we know real estate is cyclical. It goes up, it goes down certain times a year. We always know about the spring season is the best time to buy. It's a lot more activity. It's the best time to sell, I would say, not buy. When you're going through the spring season as a buyer, most people wait to list their homes going into January, February because it's most activity then. So right now, looking at the data, inventory levels typically peak in the fall season. We know that. So October 12th through the 18th, buyers could see up to 33% more active listings than at the start of the year. So guess what? You got more opportunity, more selection to choose from. Lower prices. When you're going into the winter months, prices normally they're going to fall, and so run about 3.4% below the seasonal peak. It could be more in different markets. Winter is a great time to really start looking at deals across the board. That's for investors and for primary residence home buyers. That what you're looking at. So there definitely could be some savings. If you're in the market, you need a house, you're looking to relocate. Like this is time to buy. You got the holidays. People aren't trying to move across Thanksgiving. You got Christmas coming up. Kids are still in school. Kids are out of school. Nobody's really trying to move and buy a house at that time. And so if someone's really motivating their houses on the market, it could be a really good time to buy. Greater chance of price cuts. Yeah, so they're hyping it up. Greater chance of price cuts. About 5.5% of homes tend to see price reductions. You can see the data here that looking at the weeks, and they got 0 through 55 weeks, that you can start seeing the cuts. And look at that. You see how it drops off. They're talking about October, but look at that. These price cuts that you see going into December, how drastically the reductions by week. So they come up here, so kind of the peak, you see some reductions here, and then they start dropping as we get ready to position ourselves going into the spring. That those reductions get lower and lower. So for those that's looking to buy, October, November could be the best time. Look at the data. Of course, you always want to look at your data for your local housing market and know what it means local, because this is national data. Less competition, we talked about it already, why people aren't buying. Slower pace of sales, that right now sales are definitely at a low. The more and more inventory is building up across the United States in most areas. And so right now it's turned into a buyer's market in most of those areas. And so as you look at where we are right now with the government still being shut down, jobs being lost, we're seeing the mass layoffs, UPS laying off over 40,000 people, Amazon cutting up to 30,000 jobs, and a host of other um, companies in corporate America that are shutting the doors on a lot of people that were working for them. That it's a lot going on in the market, so there could be a lot of opportunity for discounted deals for those looking to buy primary residence and those that are looking to invest. And more newly listed homes. We all know that Lennar, D.R. Horton, they haven't slowed down building homes, and they represent a larger share right now. New construction of all the homes that are being sold right now are newly built homes. And so the thing is, you want to look at the market and understand where you are and what that actually means to you. And so NAR is, they're in the business of selling real estate. So they're giving you some good definitive data on why now is a really good time to buy real estate if you're in the market. And so that's the thing that you want to kind of focus on. And in the rest of the article here, you can see where they kind of break out the different metro areas and the window of the sweet spot to buy. So they're looking at, they're a little bit objective and kind of going into the actual metro areas and providing that insight. But it really comes down to what you're looking at for yourself. What are you trying to achieve, and what it really means to you? Because a lot of times, I'll tell you, for the average American, and we'll get into the data. Today is not the right time to move into a property. Not at all for most people, just because the unaffordability is at an all-time high right now. We'll walk a little bit into that data. But one of the things I want to kind of bring up next is kind of go into the September data that kind of got finalized by NAR, and really showing what it actually the market trends and what the data is actually showing us. So inventory went up, growth is slowing. So active listings rose 17% year over year. So we had 17% more listings on the market this year than the same time, September of 2024. And that should be a no-brainer for those that are tracking the market. Regional divide wise, hey, we see a lot of this inventory in the South and West, where you had a lot of overbuilding that happened in Texas, a lot of in Florida, and areas where a lot of people were moving post-pandemic, and in the West. And so right now, South and the West are now above pre-pandemic inventory. So we're talking 2019 numbers. And and even metros like Denver and Austin far ahead of where they were 2017, 2019 norms. So there's a lot of new inventory in those market, and opportunity for price cuts, what we just talked about. Those are some of the areas where you can get some really good deals. These areas that are overbuilt, and you have a large supply that's still being trying to be absorbed in the market. That's where you're going to have the opportunities. When we start looking on the multifamily side of things, that you see a lot of opportunity, where you see the large institutional funds, they're buying class A new construction in these areas because they're looking 2, 3, 4 years from now. Because right now construction is an all-time, not all-time low, but construction is extremely low in this high interest rate environment. And come 27, 28, there's no new construction going to be coming online. And guess what? That means that rent prices are going to go up just because the growth, they're catching up, they're absorbing. Rent vacancies are starting to go down in some of these overbuilt areas. And markets like Montgomery, like we can't keep a unit on the market for more than a week when we have turnover. And so that's the thing that you have to realize, that in B and C class areas, that there's great things happening there as well too, in markets where there's not a lot of new construction, that you can still get good cash flow with buying at prices that work today in the high interest rate environment. That if they're cash flowing today, you're gonna be in great shape 2, 3 years from now, with just where the inflation is heading and where the overall market is heading, just because there's a lack of new construction in a lot of areas right now. Once all this new inventory is absorbed, that we're going to see rent prices go right back up. We see interest rates are starting to come down, which could potentially be more inflation coming into the market. And we're seeing right now it's hovering at 3%, what they're telling us, but we all know that it's definitely probably a little bit higher than how they're tracking things. So we want to look at time on the market. It's continuing to go up. Typical homes spend 62 days on the market. It's a week longer than last year in September. Prices flattened. A lot of people keep talking about, oh, we're going to see a '08 crash, '08 crash. There's a few things that when you look at it, one, we don't have the level of inventory that we had in '08. Everyone has equity in their property from the last 3, 4 years. No one has adjustable rate mortgages except on the commercial side. You have some there, but everyone has locked in 30-year fixed. And you got 40, 50% of Americans that have less than a 3.5% interest rate on their home right now. I know right now I got a 2.625 30-year. And it's like, yeah, and plenty of equity. I got, sitting at almost 50% equity. And so that's the thing that you have to look at, that this is not a '08 situation where you have a lot of people that have equity. They'll just sell their property. They can sell it for a little bit less and move on for the property, or they can just convert it to a rental property and move into another property, because a lot of people don't want to get rid of that debt. And I've had a couple conversations with clients about the interest rate, where for some it makes sense to keep the property, for others it makes sense to sell. And a lot of it comes down to return on equity and being able to tap into um, the equity of those properties and what is the return on investment that you're able to achieve with whether refinancing, getting a HELOC or just selling the property. What makes sense for you is the big question that you have to dig in. And then price cuts remain widespread, especially at lower tiers. So nearly 20% of listings saw reductions in September, with sellers between 350 to 500,000 most likely to cut. Luxury home sellers remain more patient. Reductions least common at the top of the market. So people with a lot more expensive real estate, they have the time to sit and wait on it. And at the end of the day, that we're kind of in a holding pattern right now, really, especially with the government shutdown. Like people don't realize how much impact that actually has on everything that's going on in the economy outside of just the hyper local DC area. I think we have about 18% of the government jobs, but there's government jobs that permeate throughout the entire U.S. economy. And so at the end of the day, you got to understand, how do I become the best CEO of my last name? How are you? Who's on your board of directors? Who's helping you make financial decisions? And if you don't have an advisor, you need to make sure that you have people around you in your circle, whether it's a mastermind group, it's some people that are experts in the space that are able to help you navigate. Because right now, with AI and technology, there's so much that's happening that's changing the real estate industry, that's changing our economy, our jobs, how we generate income, how we build careers for those that are going to school, that are getting ready to step into college, that you could literally go into a career field where you start right now, then you graduate 4 years from now, and that career field doesn't even exist because it's been replaced by AI. And so that's the thing, that we have to remain flexible in our approach across the board, because right now we are in a ever evolving and revolutionary time right now with AI and the impact that's going to happen with it. So we got to stay flexible. So this is the last article I wanted to review with you guys today and kind of walk through is, yeah, NAR saying it's a good time to buy, but is it really? Is it really a good time? And this article here from Harvard University, talking about the housing studies. And right now, after declining the year prior, the national median single family home price grew to 5 times the median household income in 2024. Think about that. Family home price grew to 5 times the median household income in 2024, nearly matching the previous record highs. Last year's national home price to income ratio remained elevated compared to the 4.1 seen in 2019. Breaking price growth during the pandemic, it dwarfs the far more affordable 3.2 measured throughout the 1990s. Think about that. So they're saying 4.2 right now. And let's see here, we're going through this. Figure two. So in the 90s, average was around 3.2, and we're averaging about 4.2 right now in the 2000s. Look at this, the elevation. And 5.0 and over, look at this unaffordability. Like, we haven't been this unaffordable in this many markets. The number of metro areas, we're talking about 80 metro areas that are unaffordable out of the top 100. And that's what I was saying, that NAR is saying, yeah, it's a great time to buy a home and everything, but when you look at affordability, most Americans today would be better off renting. I'll just say it. Most Americans today would be better off renting. And right now they're saying home price to income ratio rose in over 3/4 of the nation's 100 largest markets, 77 markets. So right now we got 35 homes in the highest level ever, the relative to income for its affordability. And you can read the rest of the article. It goes through and talks about the price income ratio and some of the worst areas in the market. But for most people, you're better off just renting. You're better just off renting than trying to go out and buy a home at these inflated prices and at these higher interest rates at the end of the day. And we see it so often that for those that can afford and can put deals together, my investors, this is where we make our money. This is where we make it happen, because at the end of the day, most people are looking at real estate from a traditional level, looking from a primary residence. They're not looking for foreclosures. They're not looking to buy fixer uppers. They're not looking to do creative subject to deals. They're not looking to buy commercial apartments from baby boomers. And so this is the opportunity for us as investors that can take advantage of this softness in the market, because you have people that have to sell, that don't want to pay taxes, and knowing how to put those deals together and buy an apartment complex where the owner becomes the bank and you don't have to come out of pocket for money. Yes, I bought apartment complexes where I didn't bring any money to the closing table. I actually got money back buying a full 24 unit apartment, getting money back because they had to give me the security deposits for the tenants. And it wasn't like it was a rundown building. It was 100% occupied. So they had to hand over all the security deposits to me at closing. And so those deals can happen, and those deals are out there. And so this is a great opportunity for investors, because guess what? More people need, it's unaffordable. People are going to rent. And for those that have places that they can rent, you're going to be in great shape. And we just talked about how we're not building. Construction is at near, multi-decade lows right now because the higher interest rates. It's unaffordable for most builders to build, especially to build affordable housing. They're building the luxury stuff, yeah, in the top tier markets, the Dallases, the Phoenix, where you're having a lot of the population growth. But for the average American that's coming out of college that's looking for starter homes, it's unaffordable. And so that's where us as landlords, we provide that ability to step in and not take advantage of, but provide quality housing and make a considerable return. And so I think that's where at the end of the day that we have to go in and realize what it is that we're doing and how we can position ourselves for long-term growth. So I would love to, to have a conversation with you guys and kind of understand what it is that, you're looking for. What are you looking for? How do you see the market? Are you in the market to buy? Are you still, looking to consume and come in and buy and not really worried about what's happening with the broader market? And that's the thing that you have to realize when getting out, understanding everything that you're doing, the data, what is the data telling you, and really digging in on what's most important to you as a real estate investor. And I say, once you do that, you're going to be in great shape and understanding what it is that you have to do and go into that next level. Because I'll tell you, there are opportunities out here. We're talking about the interest rates and NAR's hyping out from, the perspective of a primary residence buyer. But at the end of the day, the September 25 data that is telling us prices are stable, the market's not crashing, inventory is climbing, time on the market is stretching out. And, for the right person, it may be a great time. But I think for investors, we have to be patient, waiting for the right mix of opportunity. Remember, you don't build wealth by timing the market perfectly at all. That you build it by understanding your market individually, and understanding how it's going to serve based off your strategy. Hit the like button, hit the subscribe to the channel, and let me know which markets are you guys watching right now, where you're looking to invest. And then if you want to go a little bit deeper, join me every Wednesday morning for my $1 Million Coffee Hour, where we talk practical investing strategies, mindset, and how to finance, fix, and finish profitable real estate deals. You can register free on my website, johnnylynum.com. Tap the link down below this video. I'm Johnny Lynum, and I'm reminding you guys, stay faithful, stay focused, and keep building your freedom one deal at a time.